If you can't ban crypto, just tax it. I know you've all heard about the 44.6% capital gains tax that has been proposed by our current sitting president. This would be the highest tax creation since 1922. And if history repeats itself, we are on the verge of a Great Depression. Also, due to inflation. Anyways, this new tax is a direct attack on crypto and Bitcoin. And as you know, both crypto and Bitcoin are directly correlated with capital gains because number goes up with Bitcoin. It has not been passed yet, which is good news, but this is something I do not agree with as we have some serious issues in America figuring out where our tax money actually goes. And I think this will further harm folks below the elite income, okay? It's not just for rich people. But on the O Show, everything crypto and NFTs every day, I've got my awesome CPA Scott here with us to tell you exactly what this tax could mean for all of us. So make sure you like, comment, subscribe, set alerts, and listen to Scott.
Hey, y'all out there. We're talking about the administration's fiscal year 2025 revenue proposals that came out recently. Basically, the big area is the taxation of capital gains, which is also going to apply to digital properties. Now, this proposal is not specifically about digital properties. It's more of a global approach towards taxation. But this is one of the huge areas of change that the Biden administration is recommending. It's wanting to apply long-term gains using ordinary rates as opposed to current long-term rates. Now, realize that there are two capital gain rates that are out there. Ordinary, and that's for short-term trading, and then long-term for anything a year or longer. This is going to affect taxpayers whose taxable income exceeds $1 million. So most of us are not going to fall into that area, depending on your investment strategy. And obviously, there's adjustments for inflation on the government side. Remember that tax rates are bracketed, so lower income earners are still taxed at a much lower long-term capital gain rate. Realize, and again, I'm going to say this again, this only affects long-term tax rates for individuals earning greater than $1 million in 1 year. Now, why is the Biden administration doing this? They have noted that the current capital gain tax structure tends to benefit the very high income individuals, and they're moving to create more equity in the taxation system. Who does this affect? It doesn't affect anybody right now because it's just a proposal at this point. This has nothing to do with legislation. No IRS rules are going to be made from this. Even if it was approved, the legislature started moving towards this, it would take years before this came into fruition. What does this document mean in the larger picture? This is currently at the political level and there's no current legislation or rulings. It probably won't go anywhere anytime soon as it's a suggestion, and with the pending election coming up, we have no idea which direction this is going to go. Definitely does not have the same intent or influence as his 2022 administration policy document. We'll definitely keep you posted on all of this.
If you're interested in hiring Scott, talking to him, or asking him questions, I have all of his information on my website, CryptoWendyO.com. Scott is my personal CPA for crypto taxes. And as I always tell you guys, grift ethically within the constraints of the law. That means hire somebody who knows all of the different laws when it comes to taxes. Yes, taxes are a scam, but you still got to pay them. I highly recommend Scott. Thank you guys so much for watching. Bye-bye.